Hey there, guys. Hope you're doing pretty good. So, I got something here that I want to share. If I would have started, I don't know what to say, but this is how you could make $300 a month. Well, okay, to be honest, I didn't finish. I'm kind of bad at that. I didn't finish doing all the calculations. Also, you're gonna need three stocks, not just two of them, because then you're gonna be missing a month. Because for example, this one at the top, it's T, right? Can you guys see that T? So that's TELUS. It's Canadian telecommunication company in Canada is TELUS. That's one of my favorite ones. Actually, it is my favorite. Anyway, so they're paying they're paying starting. Okay, I'm good at talking. The only thing is I don't want to say that they're paying this number. All of this is basically just hearsay because they increased their dividend in January to 40 cents and 23. Oh wait. Okay, scratch that. It's basically 41 cents or 40 cents. Anyway, it doesn't matter. So, what I'm trying to get at is the numbers aren't very important. They're just accurate they're just accurate things. So, they're paying about 40 cents starting in January, right? Because last year they were paying about 38 cents or something like that. I could go look it up right now. It was no, fucking not eight. Fuck AT&T. I've owned both of them, and TELUS is a way better company to own. So, uh, yeah, see right here, 38. Yeah, see, so they're paying. Well, think about this. October 3rd, 2023, it was 36 cents. So then October 2025, it'll be like 46. Oh wait, 40, 42, 43. So they could go up 5 to 10 cents per 2 years. Every 2 years you're gonna get like a 10-cent raise per quarter. Well, think about it this way though. Every year, no, it'll be every year you'll get about 40 cents of an increase. On like per share. Or every 2 years or something, but yeah. That's not what was important though. I know I'm wasting time. I didn't. This is why people edit the video, because I got a hard time talking and getting this out. So, but it's not important the numbers. All I'm trying to get at is starting in January, they're paying 40 cents. So, and they're trading for about $19, right? You see that right here, 19 bucks. Yeah, so that's dollars right there. And those are dollars, and those are the how many shares, so it is different. Um, so you're gonna need, if you want to get 300 bucks, in the months of January. Well, yeah, when do they pay? January, April, July, and October. So right there, if you want to get those months, January right here. So January, April, and October, and July. That's when TELUS pays, and then you're gonna need 746 shares. 746 shares of TELUS, and you will get around $300 every quarter. So that's gonna cost you around 14,000 for $19, right? So it'll be, if you buy it over $19, it'll be more than 14,000. If you buy it under 19, it'll be below 14,000, and then your dividend percentage will go up or down as well, depending on what you purchase the shares at. And then another one is AbbVie. So this thing about AbbVie, what I like is that, like, they own the dividends compared to these is about half. You see what I mean? It's even, or TELUS even pays double, a little bit more than double, because it's only going to cost you 14,000 compared to 33,000. But that's not really what's important, because basically go to AbbVie's dividend growth history though, because then that's what's important. Right here. Well, I'll just look at it as a percentage, because I don't have the time to figure that shit out right now. Google can tell me. Yeah, the DGR. That's what's important with dividend stocks. So it shows here in 10 years, when does the dividend double? And basically in 5 years, it's, well, not quite, but that's not that high. I thought it would have been higher. So the last 10, it's an average of 10% of an increase, the dividend growth rate. So that's actually, it's not much, but it is better than TELUS's growth rate. And to be honest with you, TELUS, their growth rate, they're only going to be increasing dividends until, I think, 2 more years, I believe, at the end of 2026. Then they're gonna no more dividend increase, unless if stuff changes. And then I could also see them cutting it in half as well or something, because it got too high. But that, like, you can't predict that. Who knows? TELUS might be the giant in Canada, and they might take over the market share, or they might, who knows, invest in databases and potentially make a lot more money. And then, like, well, there you go, their dividend is actually increasing, and their share is increasing past $30. And then, like, you'll make really big money with that, because then so yeah. But what I wanted to get at is, like, there's an example to make pretty much $300 a month, because then you're going to be getting 300 in January, 300 in February, 300 in April. So you're going to miss March, but then all you got to do is just find a good company that pays in March. Like, Here, so I'm gonna go here. We're gonna look at the dividends. No, it might take a bit because I gotta go all the way back to last year and see what I got in March. And I might even get more this year because I've been buying. Oh, Microsoft. Fuck yeah. Microsoft pays in March, right? Remember? Enbridge. No, they pay at the end of February. Well, end of February, beginning of March. I mean, that's so close too. So you could buy Enbridge stock. Buy Microsoft. Buy this one, GRUNT. Fucking and Nvidia, Meta. Yo, those are all good companies in March. EQB, CNR, March, that's a great month, man. Oh, and you get Avgo. That's gonna be nuts. And Telus? Shit, dude, that's a big payment. That's gonna be a big month. March is gonna be my biggest month, I bet. Just by looking at the anyway. Wait, GRUNT? Yeah, does that pay every month? It must. What? There you go. Okay, so there. ENS. Look at these payments. Here, we'll go all the way up here. I don't own much of GRUNT or whatever the fuck. The Granite Real Estate, I think it is. Here, so SCHD. Google. So Google pays in December. That's a good one. Yeah, GRUNT. I don't got much of those. I'm actually gonna buy more of that one because I didn't realize it was a monthly payer, which is great. And then right here, CENS 152. My best one was actually I got like 160, 164, and then I sold some. Yeah, and like all the not all of them, but the Canadian banks are also like that. Those are really good. There's Royal Bank, Bank of Nova Scotia, and the bank and the TD. Those are all like solid. But you see, that's why I see I'm starting to buy the actual stocks more than the ETF themselves because think about it. If you look at the capital gain, I'll actually be honest about something. So Royal Bank, where's the other one though? VDY, look at that. So the dividend yield is not very good. My dividend yield on Royal Bank is close to 6% because I bought it. Well, yeah, so the dividends are the same. Think about it that way. The dividends with VDY and compared to Royal Bank are the same and TD. And if you got more Bank of Nova Scotia, then your dividends are actually going to be more because Bank of Nova Scotia pays a lot more. And look at this. Over the last 5 years, 42% in 5 years. I almost got that in 1 year just from Royal Bank. And my Royal Bank shares were over 30% at one point. And I bought them. Well, I just bought them this year. Like, I can't remember what I started paying for them. No, I remember buying them before they were $100. But then I wasn't buying much of that. I didn't really know. I was hearing on YouTube. You know what the problem is? I'm in Canada, so and I was hearing on YouTube from quite a bit of these investing gurus how bank stocks are not good stocks to buy and they're not secure and safe. And same with telecommunications. But it's different in Canada. The Canadian banks and telecommunications, they're fucking solid, you know? Like they pretty much it's like a monopoly. There's no private banks in Canada. You pretty much only got like you got the top three, the top 3 or 5 best banks, and the top 3 or 5 best cell phone carriers. That's it. So then, you've got a way higher chance to make money with their stock especially rather than in the ETF, you're way better to own. And not only that, think about it this way. If you're buying into an ETF, I don't care what it is, you don't own that company. You own Charles Schwab or you own Vanguard. That's who you own. And they're the ones who are investing your money, basically. And then they're taking profit. And nobody really sees that. Like, there's so much profit lost rather than just the fees in the ETF. So you're way better off to buy the individual stocks, in my opinion. That's what I've learned. Shit. I don't know how to end the video, but basically just wanted to show you guys how you could potentially earn $300 a month from different stocks. And it's a big target, but then think about it. So where's TELUS? I'm not making much money on TELUS. The reason why I put TELUS is because I'm down like 10%. 20%. So think about it. If they just go back to their all-time high, that's going to be like 25% you'll get, and you're getting an 8% dividend yield if you buy them at $19, right? So like buy a fuck ton now, sit on it for a few years, wait until they're worth 50 or $60. You'll triple your money. And you're going to be having that dividend forever, unless if they do a dividend cut, which they're not. I don't think they will. I like this though, this dividend. It's like a 12% yield that I'm getting, and then plus the capital appreciation. Finally, I was losing a lot of money on this actually though. I used to own these guys for like $15. Oh man, down in here it was kind of some shaky waters. I don't know what I'm doing though, and I've taken a lot of risk, and I don't know why. And you know what? My favorite stock of all time is going to be Microsoft. This year they've been so stagnant, but they're going to... Dude, I could see them going to $800 in 1 year and then doing a split. And then going back up to 400. We'll see, you know. I'm glad they haven't went up too much though, so I could buy buy more. Shit. I should have sold, but then I don't know. Let me know in the comments. That's one thing I need to learn more. Like, when is a good time to sell some stock and when isn't? Because, like, think about it. If you sell it, think about if you owned it for a few years and then you go and sell it, you lose you lose your old dividend. You lose your old cost basis is what I mean on the dividend. So like those shares could be making you like 10% of a yield in a few years if you just hold on to it, and then it's like compounding interest. So the capital appreciation isn't even what's important. It's the long-term dividend and the dividend growth too. And look, I didn't even mention Avgo in there. But this company is going to be awesome. It already is, because look at Durgan, Digran, or Diger, I don't even know. Because look, the last 10 years, the growth rate's been 30%. So, like the last 5 years, they've been slowing down, but at the same time, um, they've grown their dividends for like 15 years, right? And they're only going to be making more money and more money. And then, man, I'm hoping that they just give. Imagine getting imagine getting a 30% raise every year. That beats inflation right there. So I'm gonna end the video. I feel like there's a lot of unexplained knowledge that I have, and I don't know how to get it out. So maybe I'll see you guys on the next one. Just don't know if you guys want to look at the view up here. Pretty awesome. Beautiful British Columbia, right? Oh, this fucking camera, man, is pissing me off, though. Man, I just love peace and quiet. That's why I have a hard time talking. I don't know how to talk much, and I just love the peace and quiet being up here. All that you can hear is like once in a while the train on the tracks in the distance way down there in the valley. I can hear it right now, or the river, or sometimes the highway, but not often. We're too high up to hear the highway. It's either a jet or a train ripping through the valley. This is why I love this town. Like, look at this valley. It's so beautiful. All right, guys. See you on the next one.